What's up? Welcome back. On this episode, we dive in and I interview a good friend, Stratton, out of Fresno. He is an amazing wholesaler of real estate. He does some self storage stuff, also owns a virtual assistant staffing company, and then runs a really awesome conference that I had the pleasure of going to. And I mean, honestly, I have to say, it is probably one of the best conferences I've ever been to. They did a phenomenal job, really knocked it out of the park. And I've like run a conference before, I've been a part of conferences, I've spoken at a bunch of conferences. This thing was incredible. He really, really did a great job, and so I definitely have to make sure that I give him his praise for that because it was fantastic. And then really excited about this episode to be able to for us to finally connect, for me to dive in to chat with him, see what makes him go tick. He has a really cool story of how he's gone from literally nothing, $0, borrowing gas money to really like literally the next day life changing money, and then just taking off from there and then serving the community at a really high level that he operates in. So, really excited for us to dive into this. I appreciate you all for listening. Super thankful for you. But let's dive into the show. Welcome to Funds on Fire, the podcast that ignites the passion of investment funds and capital raising. Here we turn the complexities of fund management into clear, actionable steps that drive results. I've invested into diverse real estate across the United States and manage thriving funds, and I'm committed to transforming lives through the vehicle of investment funds and helping others to do the same. Join me as we document the journey of scaling businesses, raising capital, and impacting tens of thousands of people around the world. My name is Devin Robinson, and welcome to Funds on Fire. What's up? And welcome. Yeah, man, Stratton, I'm so pumped that you are here today. One, like, Stratton, I feel like you and we've been friends for a little while, but we've never actually really chopped it up together. We've always been like, yo, just let's jump on this call. Let's do this. Let's do that. And we actually do have really cool calls and conversations together over the phone. I'm really excited to get together with you in person in a couple weeks. But one of the things that just honestly, just looking back from afar, like if I'm 30,000 view, I'm kind of just looking at what you're doing and all these things. I'm just really encouraged by you. I'm encouraged by your hustle. I'm also encouraged by the way that you give so much to your community. So you really do, like a fantastic job sharing some of the stories that you have, showing people, hey, look, this is how I'm doing exactly what I'm doing. This is what you should do to go find this. And then I'm always seeing you going live with people, giving a ton of value. And it's just a really cool testament to you, the way you give back to your community. And then also, I think partially too is a big reason why you're successful as you are. And as we talk about, before this, how you could just get straight to the money. You know what I'm saying? So I appreciate you, man, being on this podcast today. I'm excited to dive into a little bit about your story, what you're doing in self-storage, and even what you're doing, because I know you have a conference coming up that I'm excited and pumped to be at, just to watch and to get a bunch of value from, just because you've set up such a great event. And so I'm pumped for you to be here, man. Tell the people who you are, where you're from, and what you do, man.
My name's Stratton Brown. I'm from a small town in Utah. Wholesale houses. We own a virtual assistant company, and we buy self-storage. And then I got this deal sent to me this morning. That's a bigger flex space deal that we'll see if we can take down. But typically, I think I've been in business since I was 22, 23 years old, and I've had not 8 or 9 different businesses at that point to where I'm good at. I was talking to Kalani about this. I probably lose 50 to 100 grand a year at least in some new venture, some new thing I wanted to invest in, whatever it is. I'm good for a 50 to 100K loss on something. Do I think we could spin this out and make it big? Yes or no? Let's see if we can do it.
Yeah. I think that's awesome, though, because I think, one, you're not afraid to fail, not afraid to take risks. And I think that's what makes great entrepreneurs, the people that are willing to go out and do what other people aren't willing to do, what's uncomfortable. I also think of Jerry Jones, who failed a lot of times before he finally struck it rich. And then now the dude owns the Dallas Cowboys. So there's that.
Do you listen to Founders Podcast, bro?
I don't. It actually is on my list to listen to, but then I look at it and I'm like, oh, 2 hours.
Bro, most of them are 45 minutes to an hour and a half. I just listened to the one on Jerry Jones. Very, very interesting. And I can see why the Cowboys operate the way they do. But I think if you are an entrepreneur, I wish I would have had Founders Podcast when I was 22 years old. I wish I would have had Founders Podcast and Hormozy, because it would have put a lot more into perspective on time and then getting your absolute ass kicked day in and day out. Because as a young man, all you had was the internet. and the internet just telling you that everything should be sunshine and rainbows all the time. And then you listen about these, even the Rockefeller got his ass beat, like all these people over, and I'm really like the robber baron era, right? Of like the early 90s, like these absolute maniacs of men who knew nothing, bro. Like these dudes are not college educated. They're just dudes doing deals on paper and pencil and building billion-dollar companies. And they still would get slaughtered and then bounce back and come back. That's why I think it's so good, because it shows you the amount of time it takes to really build something special, to where most of the people who I know who are big on social and they said they built something big when we were young are probably going to go to jail now.
You wouldn't be, I mean, you would be surprised. It's funny because even just like on that level, you see a lot of people. I think when I think about jail, I always think about like SEC violations. I'm like, there's a lot of people raising capital like they should not be, that like you just go out, but it's not because like they don't, it's because they're just like gun ho going to get it started, going and just doing it. And then they end up doing something that they shouldn't be doing because they didn't do the due diligence to realize that's probably illegal. But they were going out and they were doing it and making it happen. I also think it speaks like a lot of the stuff that you were just talking about, a lot of things you see in a lot of these founders. You think of the meme where the guy's like digging for gems, and
Yeah.
one person gets so close and turns around, and he's so close, and the other person just keeps on going. And it makes me think about like what I know about you and your story a little bit is you've gone through a lot of ups and downs. Like you've gone through, I think at one point, and you could talk about this, I think it'd be cool. At one point, you were a pro skateboarder, and then in the NFL, and then another point, you were homeless, and then now you're back to doing real estate and syndicating self storage units. And so, like, what's that journey been like for you as you've continued to push, fail, push, fail? You know what I'm saying?
It's been hard. I couldn't have done it without Kalani, who's
And Kalani is who?
my life partner, essentially.
Nice.
Um, I couldn't have done it without her. I was never a pro skateboarder, but I wanted to be a pro skateboarder when I was like, call it 12 to 14. I was really into skateboarding, and I was like, I was gung ho on skateboarding. I'm 30 now. I just turned 30. If you're my age, and you like skateboarding, you know who Nigel Houston is.
Oh, I know. Yeah. Long hair, long dreads.
Bro, Nigel was the man when we were kids, and he's still like the best skateboarder in the world. And so I was like, bro, if he could do it, I could do it. And then my dad like sat me down one day. He was like, Strat, either you're going to be watching these football games or you're going to be playing in the football games. And I was bigger, I was faster, like I was a really good athlete. And so at that point I quit skateboarding, and then I was like, from call it 15 on, I was in 4 or 5 sports. Like full time, I was on junior national USA rugby team. So I traveled to Europe and everything else with USA. I played basketball, lettered in track, played football, and I just did those sports full time. And that's what I did all high school. I had scholarships in 3 different sports coming out of high school. Ended up going with football. I thought I was slept on because I had like some D1 AA offers. And this goes into just betting on yourself. And I was like, okay, I can either go to a junior college with a full ride or take like this partial D1 AA offer. So I went to my junior college, balled out, got scholarships from like Utah, BYU, and then I was talking to Oregon, Washington State, and Fresno State called when they were ranked like 15th in the country when Devontae and Derek were there.
Yeah.
And I was like, oh yeah, I'll go there. So I go there. I don't really play a lot at the beginning. It was a big learning curve. And then finally I get on the field my senior year. I'm all conference, 17th in the country in tackles. I get a shot with Seattle. Nothing really came from it. I could have bounced around and tried to play, but there's a very, very large gap in like the NFL, like dudes who are like doing it, and like even just regular college players. It's huge, bro. And there's like, and I'm not even blaming politics. I just don't think I balled like that in order to get a spot.
Yeah,
But I know dudes who are really talented, and they got kind of ousted by politics. So, right, all that happens. At that point, all I wanted to do was like make $100,000 a year. And so I knew I could make 100. I was like, okay, I'm gonna start a home inspection business. I start the home inspection business. I do like 1 mock inspection on the rental I'm living in. I go through the crawl space. I was like, bro, I'm never fucking doing this again. Ever, bro. I was like, I don't know what's down here. I'm going to get bit by something. It's human.
Right.
I was like, I'm just not doing this. And so at that point, I had that home inspection business that I started, spent $1,000 and some change, getting a bunch of like ladders and stuff I was going to carry around on my car and just like go and do stuff. And then I was going to meetups. I met a guy. I ended up working for him, ran a lot of his day to day. And then I broke off on my own, proceeded to go broke, then proceeded to essentially be homeless. I ended up moving in with Kalani. And then from there, we finally got some traction in the wholesale space again. And I'm doing my presentation on this in a couple weeks at Deal Champ Summit. It was so bad to where I had to go pick up my son down in Bakersfield. I had to call my mom for $20 to like go pick him up. And I got there and I ran out of gas and I had to call my mom for another $20 to get home. But then the next day I had $30,000 in my account.
Yeah, it's crazy.
And so I'd say that was like the first big check. That was a game changer. And then from there, I mean, we've still had all sorts of ups and downs. If you're in business, I'd say it's majority downs and just getting through it until you get those little wins and then it feels good. And then you continue, if you want to grow at least, to get your face kicked in. Because a lot of people will stop because like they know, I personally feel like the entrepreneurs who stop growing, they've just decided I'm happy with this life and I know what it's going to take in order for me to like get something new. And I just don't want to continue this treadmill of getting kicked in the face.
That's the thing with real estate in general. We go through these ups and down cycles. We just come out of a cycle. Like, I don't know how, but our single families, our single family fund last year, I mean, felt like we got kicked in the teeth over and over and over because like deals weren't selling, deals are sitting on the market, and you can't control the worst housing market in the last 30 years. All you can control on is that you continue to go, that you continue to keep moving forward. And it's those little ones that keep pushing you back up to the top, making you feel better, and better and better and better. And so that's the goal for what we do, right? Like I think I heard like your first deal, got you like 1,500, and then that deal right there hit you to 30,000, and then now you started other companies that crashed and burned, and then you started the VA company. And the VA company is that something that you currently continue to run and add it as almost like a vertical to what you're doing, or is that a service that you're offering to other people?
No, that's a service that we offer to other people. I love that company because it's really easy for us to run. It cash flows great. It's not management intensive. When you saw me go on Steve's podcast, at that point we had 100 something employees. That was a lot. I didn't like that. I was like, okay, if I'm going to build another company and I have hundreds of employees, if I'm not making hundreds of millions of dollars, what am I doing? Like, cause like we had a whole HR department, right? So I had an HR department and we'd always have people issues and just like the logistics of it and having to manage. That was more than I'd wanted for the amount of money that company was shooting off. And then I did the math and I was like, if I'm going to make the amount of money I really want to make, I'm going to need to add on several thousand more employees. And I was like, that's not going to happen. There's no way. I don't want to do this. And so we kind of pivoted it. I broke off from my partner. And then now that company is rebranded as Virtual Help. And we help people staff up really, really world-class talent into certain roles. I think regular virtual assistants will be gone away here pretty soon, but really talented people from across the world where if you can make your hiring pool global, you can get cheaper labor and you can get better, cheaper labor. To where in Call Magicians, we had a manager for us who had a master's in bioengineering. And it was like $5 an hour. You know what I'm saying? So I got someone who could think at a completely different rate than I would have. Obviously, that doesn't directly correlate, but it shows you that they have a little bit of horsepower up there. You know what I'm saying?
Oh yeah, there's no doubt. I had a VA, or I still have a VA, and the guy's on the bar in Egypt, and it's like $5 an hour. He's on the bar. Like what? And it's crazy the amount of the work that you can get and the competency level, which is significantly higher. And so what makes it, I mean, honestly, I would love to hear for you, how do you manage the people that you have in house? Because like I don't know if you have people that are stateside and then you have VA.
I've only had like one stateside employee.
Okay, so then you've got mostly VAs, and how has that been in helping to honestly increase profitability for your company? And then also, like, how do you build a good culture when you have a I guess a majority staff of virtual assistants, people that are outside of the country?
It's hard, and that goes into another reason of why I wanted to pivot Call Magicians, because there was a call center, and I have a good friend named Scott Morse who runs a call center down in Colombia. And I was like, can we replicate the same thing virtually? And I don't think we could,
Mm.
like culturally.
Yeah.
But like one thing that we would do is we'd throw parties for people. So we had, let's say out of those 100 plus employees, we'd have 30% in Egypt, 30% in like Mexico area. We'd have another like, I wouldn't say 30%, 10% in like down in South America, and then another 30% in the Philippines.
Nice.
And so each person would get like, we'd pick a team manager over there and they'd throw a party, right? So like they'd throw a party for everybody. I'd be like, all right, just send me
Mhm.
the receipt.
Yeah.
And then
So you're almost creating like almost like a little cult, like a culture of for them over there and facilitating that from here.
we'd still do like Halloween contests. So like on Halloween, like, let me see your costumes. One thing I got from Rafael Cortez is just every day, what is something you're grateful for and what's something good that happened to you. And then it's still just holding people accountable. And then when they come in, obviously, and this gets into the same stuff that if you are into like business, like, bro, you just got to cast the vision every day. Where are we going?
Mhm.
What are we doing? What is acceptable? And then having meetings, I think, is good. I don't believe in one-on-ones because I like to just be direct all the time and be like, hey, dude, this work is shit. What's going on here? Is something going on? And I'd rather address it right then and there and just have a conversation with them person to person because that's just how I like to operate. I'm a real big fan of like Ray Dalio
Yeah.
and what he built over at Bridgewater.
Yeah.
And so like if you can apply some of that of like a meritocracy and everybody knows where they're at,
Mm.
it's a lot easier. But I'd
That's awesome.
say, yeah, the best way to do it though is in person. As we start new stuff, we'll obviously go in person if we want to get bigger and bigger and bigger. But I mean, bro, you could make a really, really good living, even just on the single family side. All we have is VAs and AI and nothing. For most people, they'd be very happy with that life.
Yeah, and I'd love to talk about that a little bit more. It's funny that you mentioned Ray Dalio. I love Ray Dalio. Have you so like there's a book called The Fund and it's about like the negative side of Bridgewater. Have you read that?
No, and I've
Uh,
heard that some people like absolutely hate Bridgewater and Ray Dalio.
yeah. Oh yeah. And this book is definitely like that. But like, and I actually liked the book. I'll tell you, because like Ray Dalio became Ray Dalio because he's Ray Dalio, right? And so then you come up with principles, and there's gonna be people that don't like it. But there's a lot of that like I learned. I was like, oh man, if I want to build something probably big like that, I probably need to grow a backbone a little bit more. Like I probably need to grow a little bit more of a backbone. Because I
Yeah.
read when I read Bridgewater, I was like, holy smokes, my dude is a savage. And so, and now some people though, just depending on the way that they are, they're just gonna interpret that the wrong way, and then their like interpretations of the situation is going to be very skewed. And so you always have to take stuff like that with a grain of salt. But the fund, it's called sorry, the book is called The Fund, and it is like insane. So good book. I would suggest it, especially if you like Ray Dalio, and then like take it with a grain of salt. But it's what it was. Now you talked about it's very interesting. You're talking so one thing that I love talking about is like one raising capital and then self storage. And so I'd love to hear like are you and you may not be and I didn't talk about this before. Do you use your VAs for anything as far as like raising capital or self storage or automating those processes or even like
You can use them in self-storage. I don't use them for raising capital. I feel like to me, we're not big enough to where I need to outsource raising capital. And I don't only the best funds in the world can you outsource raising capital.
Mhm.
More than likely, you are the golden child and everybody believes in your mind child, and that's why they're giving you money. Like you are still the face of it. And this is just my thought process. Cause like if I'm gonna give my hard-earned money to someone, I don't want to give it to some fucking associate. I'd want to know like, okay, so what does Joe Schmo think? Especially if you're raising billions. Like if you're gonna go to JP Morgan and you're like, hey bro, we need $1 billion because we're gonna go do this and this. You're talking to JP Morgan, not some fucking associate is going to be talking to JP Morgan. So I just think when it comes to that, maybe they could help on the administrative side, but for the majority of the time, you're going to be the one rowing the boat. You're going to be the face because the people believe in you. People follow Bill Ackman on Twitter for a reason. Like I love Bill Ackman.
Yeah.
I think he's one of my favorite entrepreneurs of all time.
Nice.
And he runs a fund, obviously. Everybody invests in Bill. Bill could rename his company Perishing Square right now. Nobody give two shits. Is Bill the brainchild?
Yeah. That's right.
Okay, yeah, Bill's the brainchild. All right, sweet, let's go.
Now, for you though, because I think there's a lot to play in here. So there's a lot of people that are listening to this podcast, and if they are listening to this podcast, they're probably interested in raising capital or in a fund. And I think the quickest way to scale is to hire good people, like really good people. If you actually want to replace yourself, buy back your time, make sure that you do what's in your zone as genius. And so where do you see people that would be listening to a podcast like this, or people that run funds or do things like that, they could use virtual assistants in their business?
Majority of your administrative things, I would say, is administrative things, customer support, you name it. But like when it comes to making phone calls to investors, bro, that's got to be you. I call our investors once. And I'll just call them and talk to them. I know about their kids. I know about their families. Obviously, when you hit scale, you're not going to be able to do that. And for some of it, I would personally rather have less investors, but more just like big ticket investors. I may be put over a barrel at times, but it's a lot easier on me to manage those relationships than have like a Grant Cardone model, which I think is absolute hell. But only he could pull it off with his reach, or even Pace. But at the same time, so I love Pace. Pace will be speaking at our event, and he's a mentor and a friend. Only Pace could have that many investors and still have relationships with that many investors. Unless you're going to take this thing public, I feel like you still want to have some type of personal touch. Because if you look at, let's just say, so one thing that was really great area was the Amazon automation stuff, to where they were selling a bunch of these stores, and it really was a security. If you think about it, like, and that's why a lot of these dudes are going to go to jails, because it was a security. Those guys didn't have relationships with everybody who they sold to, and they had a bunch of sales reps. And so what happened when shit started to hit the fan? Lawsuits. Because like when you're going to have you're always going to get into issues with money and everything else. Again, business is not always going to go right. If you can outperform the S&P 500, you're probably a really, really good investor. You're probably like Monish Pabrai, bro. I saw his stats the other day. Monish has not beat the fucking S&P over the last 10 years, and he's considered one of the best investors.
Yeah, I was going to say, I don't think anybody's beat the S&P.
Right? And think about that. Like Monish Pabrai is an amazing investor. He has a fund. He's obviously in the stock market. And so like you just want to, for me, I want everything to be personal. What could we use our VAs for everything operationally. And we don't even consider them VAs. It's just different employees to where they can handle everything operationally, marketing, sales. For the storage side, as we ramp up, we could have them running sales for us. But if I'm going to take your hard-earned money, I'd like to have that conversation. And that may just be, you need to find out what your unique ability is, because it might be your partner who is that person. And this could be different from your school of thought, because like there's operators, there's capital raisers, there's salesmen, but the capital raiser is a different type of salesman than the actual salesman in the sales seat. And so find out what your unique ability is, to where like today, I just got done walking this $8 million property. It's funny that I did it and then I had this. And I called my friend. I was like, hey, bro, here's what I'm thinking. And this is one of my partners. And he's like, okay, the numbers sound really good. The rents are like $30 a square foot, 30 cents a square foot. I think they could be 86 cents a square foot. They're all month-to-month leases. The person who brought it to me is a good friend of mine. He's a broker. And we think we could get it there in like 2 to 3 years. It's just figuring out what the CapEx is. He's like, all right, let me send this to my other partner who does a bunch of gas stations. See what he thinks. He's familiar with commercial. If he gives it a go, then we'll all go out and raise the cash. But that's just because we're all talented at raising cash. So I can raise some, he can raise some, his partner can raise some. Then I'll probably call Jason. And I'm like, Jason, I know you own one of these. Will you hop in on this? That way we can cover our ass, is what I think about. Like, I want someone who's experienced in this, and I'll give up as much equity as I need to, just so I know that we're safe and comfortable.
Yeah. And at the end of the day, too, because you have a fiduciary responsibility if you're managing other people's money to make sure that you're safe and comfortable. So as long as you got as long as you got it covered, that's important. So now you've done, and I'm very curious because like I think a really cool thing that too people don't often think about is I think people will go and they'll look and they'll go, okay, how do I get started into self-storage or finding some of these deals? And you're using, or you have used virtual assistants to cold call and to call like bigger. So of course we used it for single family properties, but now you use it also for self-storage, or what's one of the main ways that you're finding some of your deals, whether it be self-storage or whether it be the flex space, or I know that you're thinking about getting a little bit more into like the PE side. Where do you feel like
Brand, or
yeah,
cold
you're
calling.
sourcing these things? Cold calling?
I mean, cold calling for sure. You can have a VA cold call self-storage, but like we have stuff come in inbound internet-wise to where like we just had a random one in like Gerald, Oklahoma that's 10,000 square feet. It's 100% vacant. He wanted like 30 grand.
How did you find that? How did you get that?
It may not even be worth fucking 30 grand, bro. There's a surprising amount of self-storage within the area. And
That is interesting.
right, and so you don't want to have too much of it. And that came in through the internet through real estate bees. I'm luckily enough know majority of the PPL providers. And so I have just like, hey bro, like send me your commercial stuff and we'll buy it.
Nice.
And so like we get it through there. Cold calling, we did mail for self-storage and it didn't really perform for us. Cold calling performed well for us. But now it just kind of comes in through word of mouth, internet leads. If we wanted to start again, I could do cold calling again. The cold calling stuff, I think it works great. It's just going to take a while. So like, cause commercial, and if you're coming from a single family space, commercial's significantly slower, bro. Way slower.
So slower cash conversion cycles, but like higher profitability, I would imagine.
Bigger deals.
You
Like
do-
you can do bigger deals, but then someone's like, you could make 40K a deal wholesaling self-storage. I was like, bro, if you're getting a deal that's over 10,000 square feet, you should just keep it and you could wholesale a house in California and make 40K. Right. And like that makes more sense for your money. And what else could they use it? And your VAs could cold call, your VAs can underwrite. Operator, ChatGPT operator can almost run comps for you now, which is pretty
Yeah.
cool. But I'd say, I mean, it's, if you want to market for them, it's no different than your single family stuff and you just apply it to the same thing. Even on like the PE side that we were looking at, like buying companies, I just used a different data provider and applied the tools and it still works. It's marketing is marketing, bro. You just want to get the phone to ring and then hop on the phone with people and see how they're doing.
Yeah, that's right. Now, I'm curious for you. So, are you going and like raising a bunch of the capital, or are you doing certain? Because I know you talk about seller financing stuff. Because I think seller financing plays a pretty big part in the potential to be able to, especially with businesses and self storage, things like that. Are you using a lot of creative financing and seller financing for those?
Yeah. The two that we just sold one, we bought that one at 3%, 10% down, 500, 3% interest. That one was a killer deal. The other one we own right now up in Northern California, 2% interest, 900K purchase, 300 down, and it'll be worth 1.7 to 2 million when we're done.
Nice. Are you GPLPing with some of these things, or do you just have like individual investors that come in, help you to put down the down payment? You're splitting the upside with
This
them,
is
or
not financial advice,
of course not.
and I'm not a securities attorney. With one of them, I just called two of my friends and be like, hey, bro, send me 50 grand. Let's go buy this thing. I think it's a good deal, and I can get you a 12% return. All right, cool. And then they got they doubled their money in 18 months.
Nice. So you forced
Just did an
appreciation,
LLC.
huh?
We just did an LLC.
Oh yeah, and that makes total sense.
And that was like, but there was only three of us.
Yeah.
And it was like personal relationships. With the other one, that was like a 350. I ended up raising 450 for it. Much different.
Mhm.
We have a securities attorney on that one. We had everything above board and everything else. And that was my first one too. So like I was like, all right, I might as well go through it. I raised enough to cover the securities attorney anyways, right?
Yeah.
So it wasn't that big of a deal. And I'd say I raise as much as I can raise. If I don't think I can get it, and I need to connect you with my friend Lame, he's a capital raising master.
Nice.
He'll be at the event. I mean, he buys like 100 houses a year, like buys them creatively and keeps them. And he raises all of the money for the creative stuff, for the down
I'd
payment.
love to connect with them.
And so like if I need something and I know it's in like one of my friends' wheelhouses or it's in their area, I'm like, hey bro, I'm looking at this. You think we could make this pencil? And do you want to raise some capital for this? And they can say yes or no.
Boom. Yeah, that makes sense. On some of those, did you like so then you like went in? Do you find
All
that
forced
with
appreciation.
yeah, is it by like automating the processes and system, reducing staff costs, or did you mostly just go into like raise the rents and then that ends up taking care of most of it?
Both. One of them raising the rents was all we had to do. The other one, it was a complete turnaround. But I think because like we have our ERC company, I raised 100% of that, and we took that company to $1 million net in less than 12 months. And that was still just like, hey, here's the idea I have. I know we got X amount return based off of my testing. And we went out and raised Christian Los 3 different investors, and they threw in like 300 or 400 grand.
Nice.
And we did almost multiple 7 figures.
It's awesome because I think a lot of times when people think about getting into like the higher asset classes, or they're like, I want to jump in, been listening to these podcasts, I've been reading these books, I've been doing these things, and I want to jump into doing self-storage. I feel like we tend to overcomplicate it. I feel like we tend to think, okay, if it costs 8 million, I need to get 8 million. And then I need to figure out where to find these. But it sounds like with some VAs, with the right list, and then with a couple of good friends or some people that you know with some money that can help you to creatively structure something, you can start getting into your first deals relatively quickly. I want to take a quick second to talk to you guys about something that could completely change the game for you if you're serious about launching and scaling an investment fund. If you've ever wanted to start a real estate fund, private equity fund, or syndication, but didn't know where to start, this is for you. Fund Founders is giving you free access to Foundations 101, a step-by-step course designed to help you to structure your fund the right way so you stay SEC compliant, raise capital like a pro even if you don't have a network yet, scale your fund without constantly chasing investors, and avoid costly legal mistakes that could shut you down. This is the exact roadmap successful fund managers use to launch, manage, and raise capital for their funds without wasting time or money. And the best part, it's completely free. Go to fundsonfire.com/founders or click the links in the notes to get instant access to the Fund Foundations 101 course. Don't miss this if you're serious about raising capital and growing your fund. This is where you start. Again, that's fundsonfire.com/founders or click the link in the notes. Now let's get back to the show.
I think so, yes. I think it's easy for me to get into deals because I've built a very good name for myself and I've built my brand and people have like seen what I've built. So like by the time I bought my first storage facility, I bought 3 houses first. And I had that proof of concept. And then I went to all these masterminds and people could see that like I've been educating myself on these things. So it's not like overnight. Between me and Kalani, we probably spent 80 grand to 100 grand in education on that stuff just to like learn it, get to know it. Fucking forfeited EMDs, travel costs, right? Backing out of like 3 different deals that didn't make sense in due diligence. And then we finally find one that we want. And then it's easy to raise capital from there because people are like, oh, wow, so Stratton's grown. Wow, you grew this company to 7 figures. Wow, you're already on a rental portfolio. Oh, wow, you grew another company to 7 figures. Like next time you want to do something, bro, just like let me know.
Yeah.
I'd be interested. And that's just been from putting my name in the game. And then I actively do like the meetups and stuff. So it keeps the social relevance so I can actively raise capital, whatever I need to. And you wouldn't think and this is like for someone basic, you wouldn't think you're like raising capital. But let's say for our 0 to $1 million challenge, I paid for nothing. That's still raising capital. The PPL companies provided all the leads. That's a couple $100,000 worth of capital on their end to invest into that challenge. The CRM, at least $20,000 worth of capital on their end. Like, and you can name off all of these things.
Yeah.
That's why I think it stems from, number one, it's confidence. Number 2, it's competence. And if I have the track record behind me, then it's easy. Like, hey, here's my idea. Here's what I think I can do. And then we've never lost money. I would still rather, let's say, if we have a deal that goes bad and I know we should just offload it, I would much rather come out of pocket and pay the pref and offload the deal than just sell the deal and then just keep it going. And then that way, those people will still want to invest. They may not be very happy that we didn't get like a huge upside.
But they didn't lose money.
They didn't lose money.
Mm-hmm. Yeah, that's a big part of it. Yeah. And they made money. And that's a big key, man. I think if you can be able to limit, and I think that's so important when people think, because here's the really like sexy part about raising capital is you can go, hey, I can go and it's $8 million or like $1 million. I can go and raise $100,000 and not have to put any of my own money in. So then I don't have any skin in the game, because it's really popular to use OPM, right? Other people's money to do things and not have skin in the game. But it's also very, very important to go, if it hits the fan, I'm willing to do whatever it takes to make sure all is right. And I think that's where people get in trouble, is where they go, well, that's real estate, or that's the risk you run, and so it's so important for you, because I think we're going to transition into this, because you brought this up, like, important to build a brand and then create a brand that people can see, I guess, day in and day out, and trust that it works. And so for you, how should somebody go about building a brand if they don't have an Instagram following, like you do? They don't have the ability to start and run a meetup. How should somebody begin to build their brand? Because we keep hearing this, and I think personally, your brand is the number one, like, asset that you have, when it comes outside of, like, time and stuff like that. The number one asset that you have that will make you successful, like, moving forward and in the future. I think personal brand is going to set most people that become really wealthy in the future apart.
Think so you say they may not have a big meetup like us. They may not have a big Instagram like me, but I still started at zero. I've just been doing it longer.
Yep.
For my and co- I remember this specifically when I first started my meetup, and I was like barely doing any deals. We ran one when I was running the other investor's company, and he was like, "Bro, just take it. Like, I don't want to fucking do this." I was like, "Sweet, I'll see what I can get out of it." Bro, there was like 2 months in a row where I ran the meetup and nobody fucking showed up. You know what I'm saying? And then I just kept doing it. And then I figured out, like, okay, well, people don't want to hear about Stratton Brown. People want to hear about other people. And so I was essentially just doing like a podcast before podcasts were a thing, and I'd bring in a speaker and I'd interview him. And so, like, that's how I started my meetup. I think starting a meetup is really easy on like meetup.com, and just reach out to the biggest investor in town. If they don't have a meetup, just ask them, like, "Hey, will you come speak at this meetup? I'd love to have you." And just give back to the community. That is an easy one to start building your local brand. And that way you're giving back. You don't have to be the one like who's forward facing and everything else. And then, like, as far as Instagram, and I'd tell you pick a vertical. I still think I love TikTok. I think it's the greatest app that's ever been made. Yes, it is 100% a national security risk that should be taken seriously.
It's true, but who cares?
But who gives a shit? It is the best app ever. I love it,
Right.
bro. I have to delete it off my phone. I love it so much. I think you should start there when I'm thinking about like building a brand. Cause like capital raising wise though, I would say Twitter is one thing I would have taken a lot more seriously. A dude named Nick Huber raised, I bet you he has $100 million portfolio, and he raised all his capital through Twitter, of him just like talking on Twitter. So Twitter's good. Facebook is still good. When it comes to being able to raise capital, and this is just me, you want people to see that the way that you think and get to know you and like you. So if you could follow like my posts are to, let's say regular Instagram posts are to just like give people an insight into who I am. Stories are where they build relationships with me. My Facebook posts where I'm writing, they get to see how I process things, how I think, and the lessons that I learn, and same with Twitter. And then like an email newsletter, if you like want to take it there. And so that way, like you have an omnipresence around them, and they can see exactly how you process problems, how you solve things, how you handle yourself. And they can see like, okay, well, here's this family. And then now like they see you go snowboarding. Now they really resonate with you, and everything is there. Because when you talk about raising capital, especially at the beginning, you are only going to raise capital from your friends and family because they know, like, and trust you. So like they don't need to see these Instagram stories and these Instagram posts. They already know you. They already know that you do what you say you're going to do and everything else. Now, the rest of that is to show more people that you do what you say you're going to do, and then to show the results that you did do what you said you're going to do. And then, hey, it is a little bit of like beating your chest of, hey, look what I did here. We just made X amount of dollars. But then you got to show somehow that the fund returned money and made money.
Yeah.
So that's how I would approach it. You can stick to one. TikTok, I don't have it mastered, but I still think it's the best way to get viral and like get stuff going. But the best way to build a brand is to do something exceptional. And so if you have done anything in the past, you at least want to talk about that on a consistent basis so somebody knows that like, you're actually credible.
Yeah. And it's funny because you said the best way to build a brand is to do something exceptional. And I think that's really good. And I think sometimes people go, well, I haven't done anything exceptional. But I think about the quote, what's ordinary to you is extraordinary to somebody else. And so the fact that you're even doing stuff, you're making waves, you're doing stuff, you're closing deals, you're going to a property that you're flipping, or you're walking an $8 million project. The fact that you're actually just doing that is extraordinary and exceptional to somebody else. And so I think we negate the whole, like, I mean, Gary Vee has been talking about this for years, just documenting the journey and then reproducing it onto these, or regurgitating, reproducing it onto these different outlets like TikTok and Twitter. And it's really funny because everything like everything I listen to when all the fund managers, the people that are in finance, all that stuff, they're all just on Twitter and LinkedIn, or X and LinkedIn. They're not even on Instagram and Facebook and
They're
stuff
not,
like
bro.
that.
They're not there. Like, you're not, but you will get. So you may not get huge money out of Instagram, but you're gonna get a lot of Roth money, like 4K money, and like that's still great money, and it's easy for them to self-direct and everything else. I just personally think like the big money is going to be on LinkedIn and Twitter
Yep. Yep.
and
Sure.
Facebook. Facebook has a really good older demographic. Twitter has, I mean, because that's people who want to intellectually spar with others and they want to show off their career and they want to show off how smart they are.
Right.
And it's the same thing with LinkedIn. LinkedIn is like, hey, I'd like to announce that I am officially the #1 toilet scrubber at Jimbo's. Right? Like
Wow.
it,
Congratulations.
right? Congratulations, blah, blah, blah. And so like that's that. And so it's all career opportunity. And so I think there's something to be said about them being in the mind frame of growth
Yeah.
while they're doing that.
Yeah. And that makes sense because you do see a lot of that. I do see a ton of people. I actually have had people ask. So I've raised capital on TikTok, which I think is really interesting. So I think you're very right. It's all about what you're sharing, the information you're putting out there, and then just documenting the journey and sharing that journey. I think that's just as important. Okay, so now you've got Deal Champs coming up. What role? So for you, you throw on this thing for the community. Clearly, you have a community that you cater to and meet and kind of serve locally. And then you guys decided, you and a couple other people have decided to bring in a bunch of people that some people may know here, like Pace Morby and other people. I know like Gary Harper is going to be there. All these people that are going to be there. What made you decide to do a conference? And then I would say like, yeah, I guess what made you decide to do a conference? Because I think it's a big undertaking to do. But now, as you've done it and you've done a couple of them, what makes you decide to do that?
Back in 2020, before the scamdemic, me and my friend Jason we flew out Pace because I met Pace at an event before Pace was Pace, but he was still a fucking animal.
Mm-hmm.
Right. So I meet Pace and him and Jamil, and this is before I think you were in the real estate space. We're doing Pace and Jamil Do America.
Yeah. I don't.
And so they were like going around to all these meetups. And then I was like, hey, me and my friend have like pretty good meetups. And I called my friend Jason. I'm like, Jason, I want to fly out Pace and Jamil. And he was like, bro, let's do it. Let's do a combined meetup. And so we do that and we fill up this theater of like 300 people when they come. And I'm like, oh yeah, that's pretty cool.
Mm-hmm.
And then from there, I want to say like a year or two later, my other partner in this, Dean, it's like, hey, we all need to get together because we all had 3 different meetups. And Central California is not huge. Like there's probably 1 million people in the county of Fresno. And so we was like, bro, if we throw a meetup together in the same month, like let's say you throw one this week and I throw one the next week, it decimates our numbers. He was like, we might as well just do them all together. And so at that point, we all got together and decided like, okay, we're going to do all these things together. Let's do it. And so we started throwing our meetups together and we were like, okay, we had them all lined out for the year, one a month. And so we made like a super meetup. And then our friend Michael Zuber was like, at one random meetup, he's like, you guys should just like do a big event. Like, let's do a big event. I'll down. And Mike has like 100,000 YouTube subscribers. He's like, I'm down. I'll drive traffic. It'll be great. And so Mike announces on his YouTube channel, and we do this big event with Mike, a guy named Bo, a guy named Ty Guerrero, and then me, Dean, and Jason. And we fly out Pace again, Jamil, and my friend Henry Washington. And they all come speak with the short sale queen, but then the short sale queen ended up going to prison.
Yeah.
We didn't know that. And so we have all them, and that was like called Collaborate to Dominate. It was coming out of COVID. Like, what do you need to do to pivot? Okay, that's cool. And then out of nowhere, we did another one with like Carlos Reyes the next year. And then that year, we just like randomly started a podcast called Deal Champs because we thought we were cool and we should be talking into microphones and that people need to hear us talk more. And
It's
so,
usually how they start.
right. And so we do that one. And then we had our last big event at this place called Doubletree in downtown Fresno. And downtown Fresno is a hellhole. There was no parking. There was nothing else. And so hey guys, we're going to do this again. Like, let's see if we can like get this thing big. And so we ended up like one of my friends rented out Table Mountain Casino for a boxing tournament that he threw for his brand. He has a brand called Bring the Juice. But bro, how much was that? And it cost the same amount to rent out the whole, like the nicest casino and hotel in the city as compared to downtown in the cuts.
Dang.
And so that it's just been like slowly evolving over time. And it really is, it started off with just giving back to our community, bro. And like we keep the tickets pretty low just so we can give back to our community. We don't really do it to make a ton of money. Like we could try and go down the heavy education side and push it that way, but nowhere else in Central California, really in California, can you get access to the type of speakers that we bring and the type of network that we bring for like $99, dude. There's like nowhere else where you'd be able to like get access to something like that. Like we have a mixer the first day where everybody's going to be together getting drinks. And so that it just started off with how can we give back to the community? And then obviously there's very good ancillary benefits of being able to raise capital, more brand awareness. Like people see me in ads. I've been getting like 10 new followers a day randomly from like the ads that we're running. I can raise capital because I'm on a stage in front of 600 people. And at this point, I'm a point of authority and I can say, hey, here's the deal that we're looking at. So, and this will maybe come out before this deal, but you're on the other side of the country. If me, Dean, and Jason decide to buy this $8 million property, and again, this is not public advice, hey, we're thinking about buying an industrial property here in Fresno. If you have some money and you'd want to be interested in investing, come talk to one of us.
No.
Just that alone is huge.
Yep. Be able to do that. And I think you mentioned a couple things too that I think are really key there is like just being the person that, and you don't always have to be the person up and speaking, but being the person that's in the spaces, that's there, that's mingling, that's talking, that's even seen as an authority, almost gives you that instant like know and trustability that would make somebody want to share and or like invest capital with you because you're seen as an authority in that community and then also in what you do. And so I think even that in itself is a big way to help to raise capital to create a following and to build that brand that ultimately can help you to scale. Like if people are going to, I'm sure, how many people bring you deals? Do people bring you deals online because they know that you do that and they follow you and they want to do a deal with you?
Every day I'll get like something that like, hey bro, what do you think about this? Yesterday I got a phone call while I'm on the Stairmaster trying to get after it, trying to get, puffy chest for the event, trying to slim down, you know what I'm saying?
Yeah.
One of my boys calls me like, hey bro, I got this house. One of my boys has it. It's a sub 2 house up in Northern California. He doesn't know what to do with it. Can you help him out? Bro, he has a 2% interest rate in California. I can make that happen. Like I can make that happen, bro.
That's right.
I'll be able to make that happen. So it's just stuff like that, or someone sends me a random storage facility, or someone needs like, hey, do you still have any VAs available? What does that look like? Like you can monetize so much off of your brand. It's just, I personally feel like it's doing something exceptional, like I said. And the way we grew Calm Magicians with the brand is I just went live on Facebook and I had an unofficial podcast every week, sometimes 2 or 3 times a week. And I would wear my Calm Magicians shirt, my Calm Magicians hat, and I'd talk to some other really, really significant person wearing my Calm Magicians merch. And then I'd shout out Calm Magicians 2 or 3 times during it. We grew that thing to $1 million in 18 months with no actual ad spend, all from me talking shit on social media, building the brand. So you can do so much and you can raise so much. You just have to be in front of them more. And all you're doing is just marketing still.
And at the end of the day too, I think the 0 to 1 is just like get out there and start telling people what you're doing. You don't have to get out there and jump on a stage. You don't have to just get a microphone and start a podcast just because you think you should. Those are all things that are helpful and can accelerate the process, but just get out there and just start posting what you're doing. Get in front of the right audience that you're looking to raise capital from, find deals from, help to source you deals. Get out in front of them and just start. That's all it takes is just like one step, the 0 to 1, just share the most recent thing you did and just start. Build that personal brand.
Bro, okay, I got 2 final stories for
Let's get it.
you.
Let's get it.
that will help solidify why you should be posting from the very beginning. So the first one, a couple years ago, I'm at my office and I get this text message from one of my old roommates. He's like, "Hey, what's your number? Our old strength coach wants to talk to you from college." He's my head strength coach for for a really good team in the NFL. And he calls me. He's like, "Strat, bro, I've heard all your podcasts. I see you on social. You know what the
Nice.
fuck you're talking about, bro.
Let's go.
I'm about to sell a bunch of properties and I'd love to invest with you."
That's awesome.
So that's one story. And again, that's crazy because this guy was essentially my dad for 4 years. And a college strength coach is like your father.
Yeah.
And then we have
Mine.
right? You remember yours, bro. They're with you every day through the thick, through the thin, making you a man.
I definitely remember Mark. That dude was crazy.
And then the other one, when I got done playing ball at Fresno State, I knew I had a kid on the way. During that span, I had to fly home and work for my dad. And my dad's an electrician. He owns his own electrical company. And I was like doing some electrical. My dad was like, "Hey, come meet my son." And for the guy whose business we were wiring. And so I'm like, "Yeah, hey, my name's Stratton, blah, blah, blah. I'm getting into real estate. You can follow me on Instagram. I'd love to talk to you." And this is like me, just like fresh out of college. The dude follows me. And last year, he sends me a DM. "Bro, if you have any more storage opportunities, let me know. I've seen you since the beginning. I've seen exactly what you've done. I'm invested in a couple other funds of people who you know. I'd love to invest with you."
That's awesome.
And that's just from posting
from
from the
posting.
beginning,
That's right.
posting from the beginning and just
Share your
showing
journey.
the entire journey.
Share the journey, man. I think that's what it takes. Now, this podcast is called Funds on Fire. Man, what is something that's got you, as we kind of like land the plane here, what's something that's got you fired up for 2025? As you're heading into 2025, as you're heading into, I mean, we're looking into market changes, goals, dreams, new presidency. Like, what are you, what's got you fired up heading into 2025?
100% bonus depreciation's coming back.
Hey, let's get it.
Let's do it.
Sir.
Well, I mean, let's go. I think that's a big deal. That's
That
a
is
big
a
deal if
huge
you're a real
deal.
estate investor.
That's a huge deal. Let's go, Papa T. That's what I'm talking. Uncle T bringing it back. You know what I'm saying?
I think that is a very, very big deal if you are in real estate. It's very helpful. I think now's the time to buy for most, I would say, commercial stuff, self-storage stuff. I'm still waiting for the multifamily market just to absolutely melt. I'm waiting for the office space market to melt. And it might not. Like the debt's coming due, but I think I called it in like 2024 that those two markets would like start to actually wash away and you'd start to see some people really have their pants down.
Yeah.
So I'm gonna call it again. I think buy season is now. If you can make a deal pencil now, it's not gonna get worse, really. Like it may go into a recession, but if you can make deals pencil now and they pencil good, you're doing it. You're doing it.
Nice. Well, man, that is very, very true. I think you're very right about multifamily. That bridge debt is coming due, and office space is got demolished during COVID. It's really interesting to see a lot of these companies demand their people to come back to the offices. So it'd be really interesting to see the wave of people coming back into offices. And if you own some of them, then they're going to be looking to rent from you. And even me and my people, like we have to be in the office. I have to have our team in the office, and so I think office space is fantastic. So, but I appreciate you, man. Thanks so much for being on here. I appreciate you joining us and sharing your knowledge, man, so much. I think people can jump into a lot of 0 to 1s here today on getting started into self-storage, having VAs, and then even building that personal brand. So I appreciate you, Stratton. Where can people find you, man?
Follow me on Instagram at StratDaddy.
Boom.
Good.
Strat
That's
Daddy.
nice. Send me a DM.
Let's get it. Cool, man. I appreciate you and your time.
Of course, bro. Thank you so much.
Yes, sir. Peace. Wow. I hope you enjoyed that. I have a quick favor. If you've been enjoying the show, there's one simple way you can support us, and it's by hitting that follow button or that subscribe button on the app you're listening to. I want to level this podcast up in every single way possible, bringing you more value, incredible content and guests, and new strategies. Following the show and leaving a quick review goes a really long way in helping us to grow and continue to deliver top tier content. It's the only free thing I'll ever ask you to do, and it makes a bigger impact than I can possibly put into words. So thank you for being a part of this journey, and I'll definitely catch you on the next episode. To great success and greater impact. Peace.